So I dare say there's a general perception that there's a shift going on from active to passive. How fast is that happening? Is there a ceiling, or will it just eat the entire market?
So, 2 points. One is it's been a big acceleration in this year. And as we said earlier, we think there'll be a deceleration over the next few years.
Why is that?
That's because the Department of Labor rule unnaturally pulled forward a bunch of flows into this year because a lot of brokers and DC plan sponsors, they're scared if they don't choose the product with the lowest fee, which is a passive product, they're going to get sued.
So there's a fair amount of thought that that Department of Labor rule may go away. The new Department of Labor under Donald Trump has actually not defended in court thus far. If it goes away, does that mean there'll be a shift the other way, back into active?
So I don't think there actually will be a shift, but that deceleration I'm talking about will be more aggressive. So you're still going to have money moving from from active into passive, and I think that decelerates next year. The deceleration will be more severe if the DOL rule is modified, changed, or repealed. The other important point, though, is there's another part of the asset management industry that's growing very aggressively. It's the illiquid alt space. So if you think about, and we all call it the barbell, traditional product is moving into passive and smart beta, which is low fee on one side. It's also moving into high fee liquid alts. This is private equity, real estate, credit, and the new hot area, infrastructure. And firms like Blackstone and Carlyle are really capitalizing well on this trend.
I want to break it down from a regional perspective. I'm sat here in London. What about Europe? Is this the same theme to the same extent?
So the sad thing about Europe is I think on average you're 2 to 5 years behind the U.S. in terms of these trends. So the U.S. has been through sort of a tough run the last 5 years. So in Europe you have new regulations. You have MiFID II. In UK you have this FCA review. So I think the UK is probably moving first, and continental Europe is moving behind in markets like Germany, France, and Spain. And what's going to happen when you think about passive adoption, ETF adoption, pricing cuts, Europe is probably following the U.S. So you're probably somewhere between 2 and 5 years behind, depending on the actual country.